Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. One-on-one on the East Coast. Guy Adami, Dan Nathan, soon, and I mean soon, to be joined by the great Carter Worth. Fascinating day, made more fascinating by a couple things we have to bring to you right now, Dan Nathan.
Yeah, we're doing a little housekeeping here before we get into it. On Tuesday, December 10th at 10 a.m., our fine partners of FactSet, Guy and I, are hosting a webinar. This is really fascinating to us. We spend a lot of time talking about generative AI. What are some of the use cases? Why are some of these companies spending so much building out the compute? Who's using it? How are they monetizing it? Transforming the financial landscape, AI's role in revolutionizing technology and workflows. Go to riskreversal.com. Sign up for it. You'll be doing us a solid. Show up there. Guy and I are moderating. Katie Stepp, she's the CTO over at FactSet. Guy, you and I got to know her at the FactSet Focus event. We got to hear all about their plans, how they are using generative AI. And here's one, Dmitry Shevelenko. Nice. He is the chief business officer at Perplexity. This is one of the most interesting companies in the entire generative AI space. Look at those two good-looking guys right there. And there's Dimitri. There's Katie. We've had Perplexity CEO Arvind Srinivas on the Tape podcast. He's joined us on the Fast Money program. So tune into that. Go to riskreversal.com, December 10th, Tuesday, 10 a.m.
I think it's going to be a lot of fun. I'm looking forward to it. Yep. Doesn't cost you anything other than your time.
Yeah.
So register. With that said, yesterday, sometimes sort of the stars line up.
Yeah, they do.
Yesterday, we had an opportunity to sit down with Michael Saylor, the executive chairman and founder of MicroStrategy, a podcast that dropped today. You can also go to our website, check it out on our YouTube channel. But on the day that Bitcoin crosses 100,000, the timing could not have been better. And we had a far-ranging conversation with Michael. Maybe it's 35 minutes, so it's not a long haul. And he gives the reasons why, he thinks Bitcoin market cap could be 10x that of the gold market. Listen, I'm not trying to sort of bury the lead or get ahead, but
we'll hit that. We'll hit MicroStrategy. We'll hit the Bitcoin. We're going to hit the Bitcoin with Carter. Let's just get into it because you know what? Oftentimes we keep Carter waiting in the wings. I know he's doing some fine work there on the charts while he's waiting, but let's just do it. Carter Worth, welcome to the market call. How you doing, bud?
I'm good. What's the good word?
Bitcoin
makes a milestone today, right? Bitcoin.
Well, as you drink your coffee, it hit a milestone, and let's get into it because you brought a bunch of charts to illustrate. Well, good.
No doubt. So before we hit the charts, Carter, give us a sense. You've been charting stuff for like 30 years in the financial markets, right? When you see this sort of enthusiasm about a risk asset, now we've seen it before in Bitcoin, right? And I think that's one of the reasons why a lot of normies like Guy and myself, right, who are trying to figure out the value of it, we're trying to figure out what the interest of it, it used to be a very retail centric sort of thing. And then it got into basically there was folks building on other blockchains, Ethereum, right? And the whole idea is going to transform all these different industries. Well, that really hasn't happened, at least from our perspective. But the Bitcoin, the folks that are into it. And many of them have not wavered. One of those guys is Michael Saylor, right? So for many who kind of suffered through the Bitcoin winter of, we had one in 1819, and then we had another one in 2022. Some of those folks have just heads down and kept believing, kept adding to it. That's what Saylor's done. Talk to us about what you think about a risk asset like this that has had these peaks and valleys and it's still here. And now it's north of $2 trillion in market cap.
Yeah. And we meaning the firm and by my work have had all sorts of judgments, some good, some bad, sometimes short, sometimes long. And this is the kind of asset you said stuff, right? You said you've charted stuff. And that's the key thing because we don't look at what it is, right? We're looking at the price action or patterns independent and regardless of the size, the theme, the very essence of what kind of business. In this case, is it a business or what is it? Is it blockchain? And so this is no different, right, than any other circumstance where you study the flow of money, right? And that's what this is. So the question is, obviously, this is very popular, just as it was very unpopular at one point in the preceding 3 years, has a lot of, but the two things that were, at least my understanding, that have nothing to do with the charts. The two things that were said was, one, that it was a store of value and it was like gold. That has been that notion has been sort of disabused, if you will. That is not the case, right? It has a higher beta to the S&P. It's a risk asset. And so that's out the window. And that doesn't make it good or bad. But that, notice you don't hear that anymore because that has been proved wrong. What is proved right is that it has some life, it's enduring, and it is become increasingly a part of the mainstream. Big sell-side brokerage firms have crypto products and crypto desks and so forth, and it is here and presumptively here to stay. The question is then, on a trading basis, can you profit from it on the long or short side in any given moment, any given hour? They're day traders. They're people who are buy and hold this like any other asset. And so from our point of view, we're trying on an intermediate basis, sort of that 3 to 5, 4 to 6, 4 to 7 month time frame, trying to be tactical and find moments where we can profit and get long or short. And so the only recent efforts to that end have been that we have what is called a measured move, right? This strength of the past 3 months, and most notably since the election, leaves Bitcoin at a level where it has achieved a milestone, not the 100,000 as a round number, but has achieved what is known in old-fashioned technical parlance, a measured move. And so we're thinking here, and we published as much, it was a follow-up to the late September, early October report to buy, the follow-up was to start trimming. And so here we can look at it. I think we have 4 charts in total, guys. And this is the sort of the bit longer term. And let's now put in, we can flash that just to make a point. And so the Bitcoin was in a range, right? So it has the great run up of 23 and early 24, gets quite extended, and then spends their better part of a year, right, consolidating. Now, when you break out from a range in which you've been mired, whether it's a stock or currency or commodity, could be corn, could be cocoa, could be cryptocurrency. One way to try to figure out where you might be headed in the event of a breakout is what is known as a measured move. And in simplest terms, you take the width of the range that existed, the preceding range from which the breakout has occurred, and then you project that higher. And so at 98,400, that's where we publish a note, and it just said trim. And it was a follow-up to play for the breakout note of September, October. And so we're a little higher than that, but we're whether it's the milestone that it was a magnet and then people want to take profits, it's a trim by my work. Now let's look at a shorter term, and this is just over the past 12 months or so, and then put in some lines in here as well. Kind of you could say that's light dusting. You're only connecting a few points, but basically we would again be trimming it, and it's all about your time frames, right? One says, no, I'm holding Bitcoin for 600, 1,000. Okay, but then you don't need to talk about the chart. You go play golf and just hold it, right? And so it's who you are in the market, what your time frames are, what your objective is, and this is like anything else, a trading vehicle. It lends itself to that process.
The range is, that measured move is always interesting. And when you do that kind of work, it always seemingly comes to fruition on the back end. And by the way, this is on the back of you being bullish for a period of time. So this was the right bull call, the measured move in terms of you probably got what you were looking for. Now you're saying, now's the time to trim and look for a pullback back to that prior breakout level. It makes a lot of sense. And when you couple that, Dan, with that channel that Carter just shows us, that just sort of galvanizes or reinforces what I think the measured move is telling you.
Yeah. And, we get questions all the time, Guy and myself. And obviously, we are not technicians, but we often look at charts. It's an important input in some of the stuff that we do. But I love when Carter says, understanding who you are in the market, like what are your time frames? And the conversation that we just teased with Michael Saylor, I mean, he is obviously religious. He has never sold any Bitcoin. He uses every opportunity up or down to buy it. Most people in the market don't have that sort of risk tolerance, right? And so that's why I think Carter's work is really useful from the standpoint, if you're just a trader, if you're watching this right now, you care about what's going on intraday and the like, and these charts are about as good of an input as you're going to get. Carter Braxton Worth, we really appreciate your 2 cents. We appreciate your work. Thanks for stopping in. All right, my
Right.
man.
He's going to be on Fast Money tonight, by the way. So
Yeah,
you
yeah.
can see TBW on Fast Money
Yeah,
at
man.
5.
I mean, you know what I loved about what he just did there? I called it stuff. That was pretty inarticulate, if you will. But I think the way he rounded it out, like he doesn't care what the ticker is,
Well,
right?
that's
Like,
it.
like that's that kind of main point there, huh?
So I agreed, and he always points that out. Not that he's not able to break down fundamentals, but that's just not what he does. So let's look at MicroStrategies because, as we said, we spoke to Michael Sarrell, and what that has become in some ways is like 3, 4, almost 5x levered play of Bitcoin. And why do I mention that? Because again, we looked at Bitcoin since September, let's just say, and Bitcoin is maybe up. Well, I've been round up. Let's call it up 50% or so over that period of time. Well, that same period of time, you saw MicroStrategies go from basically $100 on the downside.
Yeah, let's go to that longer
to
term
north
chart.
of $550. So
Yeah.
you can do that. I mean, that's obviously a 5x. So when you have the underlying commodity or currency or what security that's moving, and you have what's tethered to it moving 3, 4, 5 times X, then you get to start the deep end of the pool. Now, that is seemingly coming back down to earth in terms of the movements, but one has to ask themselves, what will happen if Bitcoin were to have the back and fill that Carter just talked about, which makes sense? What will happen to MicroStrategies? My sense is you get a 2, 3x move to the downside and maybe fill that gap that was created in early November.
Yeah, so interesting about that you mentioned that gap to 300, okay? And then it kind of was off to the races after that. So Carter just went through on the Bitcoin the measured move, right? So we had that move that was what, 50,000. That's where it was consolidating, and then when it broke out, it did 50,000, it got to 100, right? So if you look at this chart, you see the guy's point, 100 to 200 was that consolidation range that it was stuck in. And when it broke out to 200, it went straight to 300. Once it got to 300, it went straight to 500. What is that doing? It's taking a advantage, I guess, or it's responsive to the leverage that was being taken to buy more Bitcoin. That's why you have this massive spread to Bitcoin. They own 400,000 Bitcoins at an average price of just under 60,000. So you can do the math there. I think their holdings they spent 25 billion. Right. They raised a lot of convertible debt at a 0 coupon. Right. And they're buying the Bitcoin. Now, Michael goes through in great detail how he's thinking about the financial engineering around this, and that conversation, go listen to it. Guy, you and I were kind of dumbfounded. We're just sitting there for like 10 minutes as he was explaining it. We found it's very interesting, but I guess deep end of the pool sort of stuff here. There it is. You can go find it on our YouTube page. That's Risk Reversal Media. Subscribe while you're there, by the way. And fascinating conversation. We just kind of want to look at the charts here. We also think it's important to note, while there's a lot of enthusiasm, obviously, around Bitcoin, there's unusual enthusiasm around the MicroStrategy.
No doubt about it. And to a certain, I think he's aware of that, and he embraces that. He also said, and pretty much, and I'm paraphrasing, but as long as the market allows him to do what he's doing, borrow money extraordinarily cheap and convert it, and he's going to continue to do it. He doesn't shy away from that. At a certain point, something will happen where that's no longer, I don't know, that ability is no longer offered to him, and then he'll move to something else. But he's made it abundantly clear that, a move from 50,000 to 100,000, when you think something is going to, 10x of where it's currently trading, $5,000, $10,000 is meaningless in the long-term game.
Yeah, no doubt. Guy, before we get to a couple trade updates, option trade updates, and I'm going to be running the legend here, buddy.
Love it.
Robinhood legend. Do you want to take a couple questions here?
Yeah, I have a couple questions. So this is more of a statement. So this is from Chris L. Timmy, I don't know if you want to pull this up on the board. It's my birthday today.
Whoa.
And I was hoping we get a mini rant from Guy. Okay.
Oh, wait. How was your traffic? That's all I got to know.
No, actually, today I left
today?
particularly early today. It was snowing. It was actually nice
about
snow.
The Rangers?
No, they don't play until Friday. This is what I'm going to rant about, if I may. So you share, Chris, a birthday with Walt Disney, which is beautiful. You also shared a birthday with Martin Van Buren. By the way, this is off the top of my head.
What number president was he?
If I had to guess, he was 13.
So it was in the mid to late.
That's a total guess, by the way. Total guess.
Well, put it in the chat. Whoever puts it in the chat.
Yeah, I'm guessing.
First one.
Because Lincoln was 16. Maybe Van Buren was earlier than that. Martin Van Buren was born in upstate New York. He married a woman named Ho. So he married a Ho. I know that this is not. Look at me. I'm not looking at anything.
Bill.
But Martin
You
Van
hear this?
Buren was 5'6" tall. So
What?
here's my rant.
Like
Okay,
that's like Mike Bloomberg.
short.
Yeah.
I have no problem with short people. I mean, you can't help it. You
Well,
you
short
dance with a
people.
girl you brought to the prom.
Yeah.
This is my problem with you short MFers, if I may. I'm 5'6.5". I'm 5'7.25". That's like when you're 4, you say you're 4.5 years old. You're either 5'6" or you're 5'7". And short people tend to do that because they're looking for every effing advantage they could
By
get.
the way, tall people do the same thing.
I have never done that in my life.
You're a specific sort
I
of
have
tall
never
person.
done
Can
that
we be
in
really
my
honest?
life.
I know, but a
No,
lot of
tall
folks do.
people. I'm 6'1",
What do you
I'm
think
6'2", I'm
like
6'3".
you're at the NFL
I'm
combine.
5'11"
You're at
and
the
a
NFL
quarter.
combine,
Stop
and
it.
you're 6'3".
How many people are in the
quarterback?
NFL combine?
I don't know, 200, 300.
It's for the population out there, and
I
Bill
got you.
Hockman knows exactly what I'm talking
He's
about.
tall.
So he doesn't do it. But if you're one of these short blanks, do yourself a favor. If you're trying to curry favor with somebody you're looking to impress, don't say I'm 5'7.25", because I got to tell you something. I'd walk out of the effing room.
Okay.
There's my rant,
Okay.
Chris.
Happy birthday, Chris.
Happy birthday,
You got
Chris.
it. The only thing I'm going to say is, you're really talking about males for the most part, because most women, I think the average.
I don't give a shit if a woman.
What's the
They can do whatever they
height
want.
of a woman in
I have no
America?
idea.
I want to say it's
5'6",
5'5",
5'5", whatever it is.
They're short. Like, you're going to rant against short women who are averaging up?
I'm specifically targeting men that do this.
Okay.
And you know who you are.
All right.
By the way, my sense is
How did we
you're
get
also
to
that
Van
group
Buren?
of people that walk around in a pack
How do we?
because there's like safety in numbers.
did
You
we get-
feel like you're
how
going to
do
be
we-
okay.
How did we get?
I
to
know
Van
I'm
Buren?
short, but I got 6 of my bros with me and we're going to be okay.
By the way,
And maybe, let's go. Hey, why don't we go get a pastrami sandwich and a cold
By the way,
one?
it's like Tom Cruise, one of your most favorite actors.
He's short.
Short. Eddie Vedder, one of my most favorite musicians. Short.
Yeah. I don't know what the point of that is. I'm not saying
but
you're allowed to be short. Just embrace your shortness.
You know who does that? Anthony Scaramucci.
Every
opportity
he's
he's
short
on
as can
stage
be.
anywhere, he makes a
He also wears
self-deprecating
shoes that are like 3-inch
By the
lift
way,
on those things.
so does Bono.
Who?
Bono, the lead singer of U2.
Microsoft back on its horse from Situation Room. Well, that has a lot to do with what we heard from Salesforce and what we're seeing in basically all these software names. So I think part of the Microsoft move is on the back of the ETF. So everything sort of gets dragged up. So to a certain extent, it makes sense. The question really is, are we going to revisit the levels that we saw back in July, or are we going to fail at this level, Dan, that we traded up to in September 19th, if you want? You can draw the horizontal line right across.
468 is that level, guy. It happened in early July. I'm such a dummy. And listen, you know what? We're right.
What?
We're wrong. We're this, that. The other day when Salesforce results came out and Mark Benioff, there was a clip while you and I were on CNBC's Fast Money.
Yeah, he took a run at Microsoft.
Oh my God, did he take a run at it? He was like, hey, listen, go talk to people. And we might have talked about this yesterday. He's like, go talk to people at Microsoft. Ask them internally whether they're using co-pilots. He was really aggressive on that. My final trade, and maybe it was a bit glib, and maybe I'm just glib. I don't know. I said I wouldn't chase Microsoft here playing for, a catch-up trade, and look what's happened. It's
but you know what? With the basically having hindsight, right? With the fortunate ability to have hindsight, you can say it actually makes sense now. But a lot of it is just, again, ETF flows can drive individual stocks. Sometimes individual stocks drive ETFs. Sometimes ETFs. So this really has nothing to do with Microsoft. It's just getting dragged up with everything else in that space. So that's that question. Big disparity between silver and SLV, SILJ, and silver. This is from Ed Morgan. That's a good question. I don't know the answer to that. I mean, I can speak intelligently about a few things. The disparity between SLV, SILV, and others, I cannot. Although I will tell you, if it's anything like the GDX and the PHYS, there's a reason why, Dan, we always say avoid the GLD, go to the PHYS. That, I think, when gold, again, is working in a meaningful way, that's the one that seemingly works.
Yeah. And actually, you had a question for Michael Saylor about gold, and the shiny metal versus the nerd gold, which he's all in on. And he had some interesting things to say also about silver, right? So check that out. Listen, silver to me just seems like it's just stuck in the mud. What are the industrial uses and this and that, whatever? It's really not trading like you would expect gold to trade, and that we've heard again and again, guy, at some point, that spread's going to get narrowed. Silver should have the same characteristics characteristics, yada, yada. So let's move on from that. I wanted to hit this because we're going to update a trade idea I detailed on November 19th in the Jets. The Jets is the ETF that tracks the airlines. But I want to start with, before we get there, Jacob, I want to start with American Airlines. This is the news of the day, guys. So they're switching card issuers, from Barclays over to Citi. This is for one of their big cards. They reiterated guidance, actually raised it a bit. So let's pull up the American Airlines charts here. Look at that move. So it's come a long way. And then I want to kind of back it out, guy. I want to look at a 5-year for a second here, and just to put some context of where this thing has been. That's a pretty nice breakout here. That's a log chart. It's going back about, I think, 5 or 6 years, back to 2018. You see a breakout like that. We don't have the volume on there. It's good volume. What does that make you think? It's through that 150-day moving average and through the downtrend.
So if you look at if you compare it to other airlines, for example, you look at American Airlines here at $18 stock, the all-time high, I believe, and don't at me if I'm wrong, but I think it was sometime in 2018 before the world went sort of pear-shaped, north of $60. By contrast, you look at a Delta, which I believe today made an all-time high. So what I think is going to happen here, that we've broken through this long-term resistance, is that you're going to start to see, and I hate using the term, but there's going to be some catch-up here in the American Airlines. So I'm not saying it's going to make a new all-time high. That's not my point. But you could see levels of like 23.5, 24, which was sort of the highs that we broke down from in the spring of 2021.
Yeah, and again, one of the things that we want to do as we're detailing options trades, way to play things. Usually we're looking at fundamentals or a catalyst. We're obviously, like we discussed before, we're using technical inputs here. This is one of the things that you see a chart like this go through a long-term resistance level, go through some short-term smoothing mechanisms like that 150-day. Look at that double bottom. It was like to a T. I like, listen, what I was playing for is a rejection.
Right.
And let's see how much this can last. Pull up the U-All, the United, the guy just mentioned here also.
Delta.
So that's
United.
having a day on the back of this too. So let's go now to this trade idea I had in Jets.
NOV 19, I believe.
NOV 19, you got it, baby. So at the time I was looking at a put spread here when the stock or the ETF was trading around 24. It was the Jan 24-21 put spread, cost about 80 cents. I was buying to open one of the Jan 24 puts, paying about $1.05, selling to open one of the Jan 21 puts about 25 cents, cost me 80 cents, break even at 23.80. Let me drive here, Jacob, because I want to pull up the legend. I want to be, I'm not feeling like a legend on a bad trade like this. So there's the Jets. Let's just look at the chart really quickly again. This is, you look at this, time frame. It looks like it was consolidating, a little bit of a flag. You get that nice breakout. It's on big volume. God, this is probably going to be one of the biggest volume
100%.
days since that earnings announcement a few weeks ago. You see the volume there. You can see my cursor right there. You see that gap. Let's go to the options chain. That was January. I'm going to pull up the January 17th. I'm going to look at the 24. Let's say, so if I bought a put spread, I was buying at the money, and let's say I was going to sell this. I'm going to sell that 24, and then I'm going to buy the 21. Okay, so that's 34 cents. You can see that I paid 80. What do we like to use?
50%
premium stop. So, it's hard to do this. I wanted to highlight this guy because the gap today put it below that 40 cents or so. Okay. So here it is. I paid 80. It's worth 34. Am I going to go and just, sell that right now? Maybe not. Let's see how the stock closes, United. Because if United closes after a big gap towards its lows, and United comes in, all the components of Jets, then I might be back in the game. So when I say about 50% premium stop, I just want to be really careful. That's not set in stone. I didn't have an order, right? Like a good till cancel order in the legend to do that. So I just wanted to make that clear. Guy, does that make sense?
Makes
from a risk
sense.
management
And
standpoint?
I'll tell you, I mean, this is going to be one of those days. It's shaping up, and it's only 120 or something, but just keep an eye on today. My sense is the VIX is going to surprise some people late in the day. So your point about you can't be formulaic in our world. We throw out formulas, but these are living, breathing things. Yeah. So I think letting the day sort of play out today might make some sense. And I think you're going to start to be surprised by some of the things that potentially could begin to roll over here. So all right, keep that in mind.
Surprise rollover. This was Tuesday. Intel had that big
that's
reversal.
On me.
No.
The Intel I was the one, again.
Well, what I was trying to detail though, guy, is how to play something contrarian
100%.
That's really weak. And you look at this, you say, we're catching a falling knife. But, one of the reasons why we like using options, again, if you want to be contrarian and you want to buy a stock and, it keeps going lower, well, you keep adding to your risk. When you buy, like in this case, a contrarian call spread, you know what your defined risk was, and then it's about managing the risk, not too different than we just talked about with the Jets. So look at this chart. Let me just kind of go shorter term here, guys. So here's a 3-month. We're kind of back at a level that's 21-ish or so, but I'm already in the trade. And it's already working very poorly, right? So sometimes, the idea of averaging down is just not most of the times it's not a great idea.
It's never the first move. When you're in a bad position, the first move should not be to add to it. It's to be to sort of take it off and then take part of it off.
Yeah. Move your feet. Isn't that what we say?
Move your feet.
How many times did you have someone that you worked for it when you were a young man on the trading desk? They said move your feet. Like
maybe.
First
they said
loss,
other
best loss. You know what I mean?
First loss, best loss.
That's what Carter says all the time.
Carter says all the time.
So this was from Tuesday. All right. The stock was trading at 22.5. It was already down from 24.5. I think after the announcement on Monday of Pat Gelsinger leaving, that's the former CEO who's been there since February 21. The stock was trading maybe as high as 26. Is that right? Ish or something like that?
Yeah. I think
let me go back to the chart.
No, I think it printed 26.
In the pre-market, it was trading, I think 25.60, but the pre-market was trading higher.
Yeah.
You see that went from 26 down to 20,
which is remarkable.
That's a huge move. It's a huge move. All right. So again, at least I'm not long the stock up here. So let's go to the options trade. What I was looking at, February expiration here. So let's move this thing around a little bit. This is how easy this thing is to do. Let me go to Feb. Give me a second here, people. There we go. Bang. All right. We were looking at the Feb 24.34 call spread. Now, that was kind of out of the money already by $1.50, and we were paying $1.50. So we knew the break even was high here. So maybe, Jacob, we can just flash this up for a second here and go back to that. Okay. So that was 22.5. That's where the stock was trading. 24.34 call spread in February. I was buying to open one of the Feb 24 calls at $1.75. I was selling one of the Feb 34 calls at 25. 150 was my max risk. All right, let me go back here now. We're at February. Let's just look at this. Okay, so we were looking at the 24. Okay, so let's just say I'm looking to close this thing out. I know that that's kind of small, and I was looking to buy back. Okay, the 34, and you can do the math right there. What is that? It's about $1. Why is that only $1? A loss of 50 cents. One of the main reasons there is because it's February expiration, right? There's a lot of time to expiration. So that's one where I'm going to keep a really close eye on. If we don't have that thing coming back towards that 22.5 strike, I'm going to look to cut that. Does that make some sense, guys?
Makes sense. And again, these are living, breathing things. And, I was the one that thought, maybe that was it on the Intel front. Listen, I'm going to still say 2025 could be a fascinating year for Intel. Their problems are deep, but, so much has been priced into the stock. So anything on the margins incrementally, even if they make an announcement, you know what, maybe we're not going to make our own chips anymore. Maybe, something like that could be interesting.
All right. So that's a good segue. Let's pull up, Jacob, Taiwan Semi. We have a chart here. And this one was kind of interesting to me because Monday morning, when Intel was initially trading up, Taiwan Semi was trading down. Okay. And then as soon as Intel started trading lower, Taiwan Semi started trading higher. So here it is, guy. It had like a 14% pullback from those highs. I want to say about a little more than a month and a half ago or so. That was after earnings. And it looked like it was really going to test that 150-day, which is a pretty nice uptrend. So now it's had this huge ramp. And so again, the idea to what you just said, if Intel abandons their desire to build fabrication plants, right, to build the chips, Taiwan Semi
wins. And that's exactly what this move is telling you. So you got to watch that as well. And then you got to watch how it trades if we get to the previous highs that we saw at the end of October. So that's that. I got one more question. This is, and I've heard of this stock, but I don't know anything about it. But I do know this much about trading. So we have a question from Fernando. Can you all see what the downside move on AAOI is? That's Applied Optoelectronics. This is a name. He's wondering why today the stock is down about 18%. Well, the short answer is because look at the move it's had since August. This was a $7 stock in August. It recently traded up to 44. So if you're in this name and you can't stomach a move of this magnitude after the run that it's had, you just got to sort of reevaluate things. By definition, you're going to see back and fills when you have these types of parabolic moves. Dan.
Yeah.
That's why I wanted to bring it up.
Yeah, and so when you ask about what the downside is, so I'm looking at January expiration, and maybe I'll pull up the legend again, Guy, if Jacob will let me run here. So what was the ticker of that one?
AAOI.
AAOI. Let's see if I have this. Okay. So here AAOI really quickly here, people. Let's go to January expiration. We're only a week into December, so you can do the math on how long that is. Let's call it 5 weeks, 5.5 weeks. Is that what we got, Guy?
Mhm.
So the stock is trading at about $36. I'm going to go look at the 35 straddle. That's the call premium plus the put premium, and that's going to cost about what's the math here, Guy?
Can't see
10
it.
10 and a half,
Might as well work
10
that
and a
well.
half or something like that. So think about that. The stock's trading at 36. The at the money, really the in the money straddle here on the call side is basically $10.50, 36 stocks. You can do the math there. This thing is so pumped right now. It's almost impossible to play in the options market from a directional standpoint. If you own the stock and you had this big run, you own it from single digits or something, the idea of selling some calls against it, doing a sort of overwrite would make some sense, taking some premium.
Especially when you can take advantage of the premium. So that's it. Last question, and then I got to fly. So 77 Figures asks, action today is trash in the SPY. Now, that was out there about 20 minutes or so ago. And if you do a short-term chart of the SPY, Jacob, you'll see he was actually spot on. We've seen a pretty significant sell-off over the last 15 or 20 minutes. I don't know on the back of what, but as I mentioned earlier, this is one of those days where you sort of want to watch very closely. We did make an all-time high today in the S&P at 60.94. We've obviously traded off a bit. It's going to be interesting to see how the rest of the day plays out.
Yeah, so just, again, a little housekeeping. Guy and I had a great conversation with Courtney Brown. She is the head economics reporter at Axios. We've been tracking her career for a long time.
Yeah, for a decade.
She used to work with us on the production team at Fast Money 10 years ago. So we had a great Fed preview. Courtney is the reporter for Axios who is in the room at the Fed presser. She gets to ask the question for Axios. I just want to flash up the FedWatch tool really quickly, Guy. So we talked about this with Liz yesterday on the market call. At one point over the last few weeks, the probability of the Fed at their December 18th meeting to cut 25 basis points was like 50-50. And then earlier in the week, it was like 62. Now it's 72. So that's interesting that that's creeping back up. And, all of us have to keep an eye on what President-elect Trump is saying about, we know that he wants to see rate cuts. And so we'll see what happens as we get into December 18th. Last thing, let's just do it again, Guy. On Tuesday, that's Deck 10 at 10 a.m. Why do we keep bringing it up? Because we're super excited about it, transforming the financial landscape, AI's role, and revolutionizing technology and workflows. We have Katie Stepp. She is the CTO at FactSet. This webinar, you can get on there at riskreversal.com. Please go register. And we also have from Perplexity, and I'm super psyched about having him there. This is Dmitry Shevelenko. He is their chief business officer. We're going to hear from them what sort of customers are using their technology and what sort of productivity gains are they getting and where are they in the life cycle of all this.
Sign up, people. Check out our interview with Michael Saylor.
Yep.
That's pretty cool. Go to our Risk Reversal page, subscribe to YouTube. And this is the genius of Bill Hochman.
Really?
Yeah.
There is genius there?
He did. He texted me during my little rant there about Martin Van Buren, and he said, more like Martin Minivan Buren.
Oh, geez. Dun-dun-dun.
Minivan Buren.
If you're in New York City, just Google Bill Hochman. He's probably playing at one of those very, very nice downtown, performing at one of those very nice downtown comedy clubs. Bill Hochman. That's Hockman.
He is the man.
All right, should we get out of here?
I've enjoyed it. Today is Thursday. Lots going to happen, I think, the rest of today. So stay tuned for that. We'll be back on Monday, but check out our podcasts, which will drop. Dan mentioned them all. And the Saylor interview, I think, if you're into the crypto or if you want to learn more about it,
curious. You can be crypto
curious. That's one to listen to or watch. Thanks, folks.
Thanks, everyone.